The S&P rating agency has called it a selective default, rating this as a selective default. I want to go to Matt Miller, who has all the details for us. Matt.
That's right, selective default, Trish, because they're talking only about bonds that are coming due in 2033 and 2033. We all know the situation. The hedge fund, Elliott Management Corp, has been negotiating with Argentina about debt that it's been owed for a long time, but recently a court finally said Argentina has to pay it back in full. It never negotiated that debt previously, but there was a big group of holdouts. The majority of the holders had renegotiated that debt, restructured that debt long ago, and they were being paid regularly. Now a judge has ruled that Argentina cannot pay those renegotiated debt payments or those restructured debt payments unless it also pays Elliott the amount that it owes Elliott in full and any of the holdouts in full. There are a couple others besides Elliott. So with this ruling, it has missed a $539 million payment. Argentina has. It had until today to make the payment to Elliott or to come to an agreement with Elliott. Its finance minister had been in talks with Paul Singer of Elliott Management Corp. They did not come to an agreement, and so they have blown past this deadline. So now Standard & Poor's considers them in default of this debt due in 2033. So that's why it's a selective debt, not altogether. Still making debt payments on other bonds that it's issued, but not on these.
Mike
Trish?
McKee, our economics editor, joining us here as well. Matt, stay with me. Mike, selective default, is this in any way better than what could have been the outcome?
No, not necessarily. If Argentina doesn't find a way to cure this very quickly, and that is still a possibility because the meetings are still going on, there is a clause in most of these bond contracts called cross-default, which would allow those who hold the restructured bonds to immediately demand full payment. So Argentina could be on the hook for a lot now that a default has been declared. If they do reach some agreement in the meantime, that would probably obviate that, but that is the threat hanging over Argentina right now.
So it leaves investors in a pretty poor spot.
Well, for the moment, it's an odd situation because Argentina's on a different time zone than the U.S. S&P apparently working off of the close of U.S. markets, and then at the same time, when Bank of New York Mellon, their clearing bank's day may have ended because they're holding the money to pay the debt. But if they were to cure this, if they were to come up with a settlement tomorrow, this all could be reversed. So it isn't clear exactly what would happen. The biggest question right now is if you hold a credit default swap on Argentina and a default has been declared, you're going to go to the International Swaps and Derivatives Association and ask them to rule that you get paid. What do? They have to wait and see whether or not this goes through and whether there is an actual default.
Hey, Matt, I'm just reading from Bloomberg News here. They spoke with a senior Latin American economist at Goldman Sachs who's telling Bloomberg News that there's an expectation that a deal with holdouts will still be worked out. And he went on to say an Argentina default is expected to be short-lived at this point and shouldn't have any major implication for the country.
That's right. And actually, you saw today this debt surge in price. So even though they were nearing this deadline without an agreement, the debt was up 10 cents to 95.57 cents, in fact, on the dollar. So that's the highest this debt has been valued in 3 years, and that's because investors expect some sort of agreement. Now, while on the one hand, a selective debt is very bad, especially for the reasons that Mike points out, it can trigger some clauses that allow all the debt holders, including restructured bondholders, to call in all of their chips. On the other hand, this is a situation that we've all been following very closely. Everybody's been watching as these negotiations have taken place. Everybody's been watching the court battles. So we all know exactly where, well, not exactly, but we all know to some degree where things stand. And that's why with industry analysts saying this could be resolved very soon, the debt hasn't taken an absolute dive.
Mike McKee, the real fear is that you could see some kind of contagion as a result of this. Might that be the case? Are other emerging markets going to struggle in debt markets because of this selective default rating by S&P on Argentina?
Well, I've talked to a number of sovereign analysts who follow Latin America in particular, and they say no, very few of Argentina's bonds are held by anybody other than hedge funds at this point, and very few of these countries have the same sort of problems Argentina does with its economy. As a matter of fact, Ecuador went to market last week and sold out its sovereign offering without any problems in New York. So no issue seems to be, no significant issue there, it seems, at this point. Of course, the clauses that got Argentina in trouble, the pari passu or equal treatment clauses, have largely been dropped from bond contracts. So as long as people are making their payments, that doesn't seem to be the issue. Now, the question going forward here is can Argentina reach a deal? It doesn't look like Argentina wants to deal with the holdouts, but it does look like they may do some sort of ledger domain where banks in Argentina buy the debt from the holdouts if they agree, and then they go to the judge and say, please lift the stay, let us pay everyone else, the default is cured, and then we'll pay the banks in the long run. It's a complicated process, but it might work if the holdouts get their full amount.
Mike, let me ask you about the timing in all of this. You did mention, of course, the time difference between us and Argentina, and that there was a sense that we needed to wait for the U.S. markets to close before this was announced. In terms of a deal that could potentially be worked out, how long might it take?
Well, they're obviously working under the gun now with this S&P rating downgrade hanging over them. There was a feeling that they could get it done today if all parties would agree, but it hasn't happened. So there seemed to be some sort of sticking point. And from what I understand going on in the talks, the holdouts are still concerned about making sure they actually do get paid before they reach any kind of agreement with Argentina. They don't trust the Argentines because they've held out for so long against paying them.